Cold, hard cash. It used to be king, but in a world where you can pay someone by swiping a few times and clicking a button, consumers are opting to transfer money online instead.
They are the two words all millennials seem to be using these days. Venmo me!
One popular option is Venmo.
If you haven't used it yet, there's a good chance you will soon.
The peer-to-peer payment app, owned by PayPal, has become a household name.
I don't have Venmo.
Katie, get Venmo, it's free.
The finance app also operates like a social network and lets you comment on payments, seeing who and what your friends are spending on. It all happens pretty seamlessly from your phone. But on the back end, it's not as simple as using cash. Some have concerns over data and the fact that it's not a bank, and Wall Street is waiting to see if it can really become a moneymaker for its parent company.
It's a real concern. Venmo isn't profitable.
And it is a very strong social network. Personally, it freaks me out that people know who I paid and who paid me, but I guess millennials like that.
Let's take it back to where this all started. Venmo was founded a decade ago by two former University of Pennsylvania students.
He was visiting me in New York and didn't have his wallet, so I covered him for the whole weekend. And he wrote me a check to pay me back, and we thought, this is silly, we should be using our phones to do this.
It was later bought by Braintree for $26 million. Not billion, million. Braintree was later bought by PayPal. Bill Reddy, CEO of Braintree at the time and now Chief Operating Officer at PayPal, is the man responsible for bringing the no-name app to mainstream fame.
The name Venmo comes from the Latin vendere and mobile, and sort of bringing those two things together. We really wanted to be the way people would pay for everything.
Braintree's platform helped PayPal dive into mobile, which is now about 40% of its business. Bill had us to PayPal's New York City offices, where Venmo is headquartered.
It's come a long way from where it had been at one time. The early Venmo office, literally there were 10 people in the office, unfinished floors, and it was so crowded that for me to do conference calls, I'd go up on the rooftop, which was unfinished, so like tar roof.
Reddy has founded 5 startups and has a background in software engineering. He bet on mobile payments before banks were in the palms of our hands.
Now you look back at it, we did $19 billion in volume last quarter alone, growing 80% plus year on year still. So $26 million now looks like, a steal. Back then, people thought it was crazy to pay that.
The app has since evolved into a crown jewel in PayPal's digital payments empire. For all of 2018, the app processed $62 billion in payments, a 79% increase from a year earlier. And the company says it's on track to reach $100 billion by the end of 2019. Getting users on the platform has been a snowball effect. One estimate from eMarketer says Venmo has attracted 27.4 million people.
Each user begets other new users and becomes more engaged over time.
Profitability.
Yeah.
What will that take?
Venmo is now one of the largest mobile apps in the world by dollar volume. I think in the US you put it as top 2 or top 3. And so, we're really focused on, the growth and the market share that we're capturing and making sure we have monetization and line of sight to profitability, but not necessarily trying to get to profits today. We want to make sure we go capture that market.
Bottom line, Venmo's still not breaking even, and it won't be for a while. So part of its appeal is that it's free, which has attracted a ton of millennials, but how do they plan to make money eventually? The company does charge for certain events. If you want to use a credit card instead of a debit card on Venmo, it's a 3% fee. And if you want money in your account faster than the typical 1 to 2 day wait, you can pay for that too. The company also partners with Uber, Chipotle, Grubhub, and others, and makes money off of those partnerships.
The primary way that we make money on Venmo is really by merchants paying us for the acceptance of Venmo, which is the same way that PayPal makes money. Merchants that choose to accept Venmo, they pay us a small fee to accept payment from a Venmo user.
Venmo is not a bank though. PayPal has money transmitter licenses. The money in your account is actually held at a partner bank. It's a common setup for fintech companies that don't have a bank charter. The tech company handles the front end, and it may appear as though the money is sitting in an account on your phone, but it's really not. The partner bank is the one holding that money. It all means that money you keep on Venmo's platform is not insured by the federal government, like it would be in a standard checking or savings account. I mean, no aspirations at all to become a bank?
It's not the business that we're in. We're partnering with major financial institutions that hold that money for us. Wells Fargo is a major partner for us on that, but we work with a number of them.
They're not paying you interest when you keep your money there. They're also not lending it out like a bank can, but they're making a little bit of money. Would you guys ever invest that money?
Separate from Venmo, if you look across PayPal, we will hold balances in some very safe investment grade securities, think government treasuries or things like that.
And so do you earn interest on that, I assume?
A small amount, yes.
Got it. But that small amount can really add up for a company holding a boatload of cash, offering a big money-making opportunity for Venmo. So how does Venmo actually work? You link your bank account, type in someone's number, the dollar amount, and send it, but it's not all that easy.
Think of it as a duck going across water. It looks very smooth to the consumer, but below is their feet moving very quickly. You send money to me, Kate, it shows up in my Venmo account real time, but the money is really not in my bank account. Could I go spend it? No. Could I go to the ATM and use it? No. So how Venmo works, if I wanted to get it and move it into my bank account, then I have to go into the traditional bank system we call ACH, or the automated clearinghouse. And that's when all the friction happens. Just like our roads and bridges are broken, our payment infrastructure is old and broken. All the transactions are batched up, sent to the Federal Reserve, and it's sent overnight to your bank. And so it's very inefficient, and it really shows up the next day between the banks.
Venmo is hardly the only game in town for digital payments. Square's popular peer-to-peer Cash App has similar features, and according to one report, is growing even faster than Venmo.
The Square Cash App downloads have actually exceeded Venmo's. Every month that passes by, the gap between the two keeps widening. So literally Square Cash adds about 2 million users every month, which is amazing. If you go on Google Trends and type Square Cash, what you'll see, which I thought was striking, is along the southeast, that's where most people have searched for Square Cash. You don't see that as much in the Northeast and sort of the Pacific West. And the interesting thing there is it turns out that there's a socioeconomic thing to this. The Square Cash app, it's become sort of the go-to app for the underbanked. Whereas Venmo is still being used a lot, but is a different socioeconomic group of people, let's say, like, I don't know, the cliche is like millennials.
Got it. So sort of the coastal millennials are using Venmo.
Pampered millennials versus hardworking, underbanked. So I mean, so I'm exaggerating, but that's sort of like the way it turned out.
But Bill Reddy insists Venmo is also going after the underbanked.
This aspect of finding ways to get the underserved, whether that's on the consumer side or merchant side, into the digital economy, extremely important, not just for us, but I think to the health of the economy.
Banks are also getting into that P2P payment game. The big banks, JP Morgan, Bank of America, Citi, Wells Fargo, and others, launched Zelle in 2017, and Zelle is a little bit different than Venmo. There's no middleman, so it's directly integrated with the banks.
There's more security around it because there's more compliance, because the regulators look at that and look at those transactions and ensure that you're doing it in a proper way.
According to a Wall Street Journal report, Venmo was hit by a wave of payment frauds in 2018 that helped push losses higher than the company previously expected. They recorded an operating loss of about $40 million, nearly 40% higher than the loss for which the company had budgeted. In a statement to CNBC, PayPal said, Venmo loss levels are lower than the overall average for PayPal and compare favorably to the industry. When introducing new features, it is not unusual to see short periods of elevated losses. Reddy said preventing fraud is one reason they collect data, which has gotten other tech companies like Facebook into hot water.
To be very clear, we're not in the business of selling people's data. We don't engage in that. We leverage things about the device and those types of things for fraud protection purposes. In terms of the user's information being shared, the user is in full control of what they share.
Financial technology, or fintech, has a higher bar for regulation. Venmo has run into issues with the FTC, but it's settled. The industry watchdog accused Venmo of misleading customers when it came to privacy disclosures and some information being automatically displayed on Venmo's social newsfeed. The FTC also alleged that Venmo misrepresented the extent to which consumers' financial accounts were protected by, quote, bank-grade security systems.
We have been a pioneer in the space. When you're doing things that have never been done before, you're trying to make sure you do the best that you can to work with regulation that exists, but sometimes that regulation may not speak to new things that have not been done before. And the FTC settlement, much of it was addressing things that we had already addressed, but we have absolutely made sure to implement all the recommendations. We always work very closely with regulators. We really take an approach that we have a common interest with regulators.
Venmo has had to comply with international sanctions and law enforcement, which can be tricky when people are communicating with emojis. So how do you distinguish what's a joke and what's really a threat?
So we actually, from regulators, get a list of keywords. And if people use those keywords or names that might be on a terrorist watch list, any of those kinds of things, we are obligated to go intervene and report those. Now, what we're able to do in those is give the user a way to go explain what it was that, like, okay, you weren't buying goods from Cuba, you were buying a Cuban sandwich.
Are there certain emojis that would trigger a warning from Venmo?
We don't have a list of embargoed emojis just yet, but maybe that's coming in the future.
Got it. So Venmo has revolutionized the way we think about cash. But Wall Street is still watching to see whether or not it can really become profitable for its parent company, PayPal. Like any fintech company, there are plenty of challenges. The bar for regulation is very high. There are data and privacy concerns, and of course, they've got tons and tons of competition.